Let's first up introduce Mr. P.V. Subramaniam of Subramani.com to talk about our very first topic at hand. You know, Mr. Subramaniam, firstly, thank you so much for joining us today on ET Now. There's one interesting data point that was released by the RBI a couple of days ago, and it points to a trend that's, well, not exactly comforting. Personal loans from as on 18th June, compared to the last year same time, has increased by close to 12% at more than 27 lakh crore rupees. Housing loans as well have increased, and so have vehicle loans. India seems to be getting a bit more indebted, and I would say in the last 1 year, you know, considering how the economy has been, I would reckon that apart from, you know, those individuals employed in IT, we've not really seen a drastic increase in income. How are you looking at this trend, firstly?
So thanks for having me here. So I think we are going the American way for everything, including borrowing. So this borrowing could be many types. One is people leaving their jobs and therefore needing some help, and therefore they are borrowing. They are borrowing to pay big medical bills. You're hearing of 35 lakh rupee COVID bills. So maybe they're paying for that, or maybe they're just spending more, or they're making losses in equities, etc., for which again they're funding by borrowing. So all these possibilities exist, and then maybe they're just spending more money. So yes, and if you see the kind of advertising that happens, every time you pick up your phone, there is a message saying that a home loan is available, a car loan is available. I'm inundated with 3 lakh rupee loans and 3 crore rupee loans. So, you know, it's easier to take a loan. So I think people are taking it, and well, good for lenders, good for banks, good for the NBFCs which give loans. I don't know whether it is really good for the people taking the loan.
You know, you mentioned going the American way. How have the Americans really suffered as a ramification of this extra indebtedness? I think that could be a good example as well for Indians to imbibe that, okay, we've done this, but also what are the lessons to learn from that? And you also mentioned it's good for banks, it's good for financial institutions, but not so much so for individuals. Why is that?
See, the question is, first of all, people have to learn to live within what they earn. Now, if that does not happen, then people are willing to borrow for everything. People are willing to borrow for education, for marriage. You know, I keep saying, just because Ambani spent 700 crores, please realize he did not have to borrow to spend money on the wedding. But it is so common to see auto rickshaw drivers and, maid servants borrow 5 lakhs, 7 lakhs for marriages. So the way people are borrowing, not just at the higher level, but even at the lower level, people are just borrowing for everything. Good, bad, I don't know, because it is easy for me to say, oh, don't borrow. But people who need the money and who are under peer pressure and social pressure to spend money, they spend money on weddings, on funerals, on festivities. You'll have Ganesh Chaturthi and people will borrow money for Ganesh Chaturthi and spend at home. So people have just been borrowing for everything. So obviously indebtedness will go up. We are not as good as the Americans, because the Americans at least have social security. They have the government sending you $600 checks every month because of COVID. In India, you have no such support. So if people are borrowing money because they did not have adequate medical insurance, etc., tell me, what is the choice? I mean, somebody who is borrowing for luxurious living, you can say don't borrow, but what happens to people who are borrowing to pay the COVID bills? So this will happen.
Yeah, you know, it's important. What is the purpose for which you're borrowing? I think that's a very crucial point that you hit. So, Mr. Subramaniam, since we are on that, let's elaborate a little bit. You borrow for entertainment, you borrow for festivals, you borrow for occasions, you borrow to build an asset, you borrow to maintain a business as well. Especially for small business owners, this is truer now more than ever, because, you know, many small businesses have struggled to stay afloat. So, you know, what purposes would you sanction loan, going in for a loan, and which ones would you say, you'd rather just not take a loan and sort of starve it off?
Step one, I won't borrow at all. That is the best situation. You invest, Mubina, you're young, okay. So you start investing now, and by the time maybe you're 45, you take that money out and buy a house. But do you think anybody even wants to hear this advice? Everybody is telling you, oh, you're 25, you should be buying a house, you should be buying a car. So people, the minute you borrow, you realize that you're living beyond your means. So people will borrow, people are borrowing for a car, they're borrowing for entertainment. I would not borrow for anything other than maybe a house. And that too, I wouldn't borrow more than 40-50% of the cost of the house. खुद का will be, I mean, your own money will be the other 50%. So if you have gathered 50 lakhs, buy a 1 crore house. If you have 1 crore, buy a 2 crore house. Because today with uncertainty about jobs, about working conditions, etc., why would you borrow money and struggle to pay the EMI in case you don't have a job? So I would be ultra careful. But I also realize that people will say, "Arey, you have money, so you're not borrowing." So people who don't have money borrow literally for everything. Like you enumerated, people borrow for entertainment, people borrow to pay medical bills, everything. So you can't really stop it. If a person doesn't have money, he realizes there is a quick fix. Call up a NBFC or call up a bank, they come home and they give money. Many people don't even know what rate of interest. Oh, there is a NBFC which lends money to you for buying a sari, right? So loans are available and loans are available very easily. All you have to do is go to a sari shop. There's an NBFC sitting there willing to give you money. I think that we have made it very easy to borrow, so therefore people will keep borrowing.
So in case if an individual is in the midst of a cash crisis, like you mentioned, right, that it will probably be easier for somebody who already has money, to start through it. But let's say if somebody is in the midst of a cash crisis and, they have EMIs to pay down, let's assume it's for their homes. Plus they have all the other essential expenses as well. And income is going a little haywire or they're having a tough period. And again, because they've not done proper planning, they don't have an emergency fund in place. So in such a situation, you would prefer maybe winding down some of your assets, let's say in equities, or even, for example, maybe selling some of those gold coins that you had accumulated over taking a loan?
Yes, absolutely. I would even go to my housing loan company, and if I have a loan which I've paid for 9 years, which means I built some equity in the house, I'll go and convert that 20-year loan, of which only 11 years is pending, to again a 20-year loan. So it will actually increase my interest cost, but it will reduce my cash flow burden. First step, I will do that because that is the one where I can get chunky money. After that, I would sell off some gold and then I will prune down the equity assets. The advantage with equity assets is you can sell partially. If you have a 30 lakh portfolio and you need 5 lakhs, you can sell 5 lakhs of equity. If you don't sell equity now, when will you sell? Markets are doing well. It's a great time to be selling off some of your equity and instead of borrowing money. So no, I wouldn't borrow. I would first prune down my assets and then I would think of borrowing. And very important, Mubina, when I borrow, I will first wonder how am I going to repay? Because if I lost my job, it looks easy to borrow money, but the more important thing is to be able to repay. So how am I going to repay? And if I can't repay, then I shouldn't be borrowing. I should struggle with the existing cash flow instead of borrowing and then increasing my loan repayment and interest payment. So I would not borrow unless I know how I am going to repay.
We'll come to that repayment bit as well. Mr. Subramaniam, in the beginning, you said that the only purpose you would borrow money for would be if you had to buy a house. And there was a certain percentage as well that you put in place over there, that the EMI that you pay down will not exceed that percentage. If you could just reiterate for our viewers, how much should that be? And additionally, Mr. Subramaniam, what if there are extraordinary circumstances like what we saw last year, right, when people lost their jobs, when salaries were slashed, that suddenly your debt starts increasing that percentage? How do you manage that then? You mentioned going to the bank and sort of speaking with them, trying to sort of restructure the loan. That's one option on the table. But what are the other ways that you can, and how okay is it really to be flexible with that debt to income ratio?
See, first of all, I think if you think that the damage to your salary is permanent, then you have to rethink your whole strategy of living in the area where you're staying. Now, suppose you're living in Santa Cruz, maybe you shift to Malad, right? You try to get some equity out of the house. You try to reduce the EMI. And there are many things I would put for a housing loan. I wouldn't take more than 3 years CTC as a housing loan. I will make sure that it is a 20%, it's a 20-year loan. I will make sure that my EMI payment is not more than 30% of my income, and I will ensure that I make at least a 40% down payment. So I call this the 2, 20, 30, 40 rule, and this is how I would borrow to buy a house. So I think that is, and if you think that the change in your salary is temporary, or change in your business is temporary, then I would suggest borrowing. But if I think it's more permanent, I would say readjust your school, your college, your children's education dreams. Everything will have to be readjusted. If your income is not going back to the pre-COVID levels in a hurry, you need to live a little more frugally for the next 3-4 years till you go back to normal. If you're a pilot in an airline and you have been asked to sit at home, you need to dramatically prune down your standard of living, because pilot jobs are not going to be so easy to come back. If it comes back, great, but till it comes back, don't borrow, because it could become too big a burden.
Let's talk about the repayment bit. The one trend that we've been seeing, and a lot of banks as well have been reporting, is that there is more delinquency seen in the retail loan book. To put that in simple terms, individuals are not paying back loans and the money borrowed to the banks and financial institutions. This is not good news, meantime, for banks and financial institutions. According to you, where in the pecking order should debt repayment be when someone's income is sort of stuck in that range, or they've seen a cut in their income? How important is debt repayment, and what are the ramifications of being delinquent in your loan servicing?
See, I think if you are having a cash flow problem and you don't have enough assets to sell, the topmost priority should be your term insurance and medical insurance. Because without these two payments, your family could be in deep trouble if something were to happen to you. Even if you were to be hit by COVID or something else, if you don't have medical insurance, you're going to be in trouble. If you don't have term insurance, your family is going to be in very big trouble. So these two should be the topmost payments. After this, you should do your loan repayments. Loan repayments, again, you will do the most expensive loan first. So if you have a loan at 3.5% per month, which is about 50% per annum almost, then you will repay that first, and then you will repay the 12% loan or the 13% loan. So obviously your credit card loan will be the most expensive. You will repay that the fastest, and then you will repay other loans. But if you can't repay, better to go and talk to the bank and reduce the EMI amounts much before the problem actually hits. No point in going to the bank after your check bounces, because the banker is not going to be very receptive to you. Going 5 days, 10 days before the check bounces is much better than going 1 hour after the check bounces. So I think that way you need to renegotiate and repay. But yes, it should be top of the pecking order, or your CIBIL rating goes for a 6, and that gets into you more trouble. Your next borrowing will be at a higher rate. So when you remember all this, then you be careful and you repay properly. Your CIBIL score is something which you have to worry about, because otherwise you will never be able to borrow again. There are jobs which you won't get if your CIBIL score falls below a particular level. So you have to be worried about your CIBIL score.
Well, in the first place, of course, only take a loan when you are confident of your ability to be able to repay it. That's extremely important. And if you think that your incomes have been hit to such an extent that it's going to take a little while to come back to what it was before, or it's irreparable, then you'll probably have to reassess all of your lifestyle choices and, everything, your dreams, your goals, as Mr. Subramaniam mentioned. Well, let's take on board some questions and queries then, and let me tell our viewers that you too can write into us. Our email address is themoneyshow@etnow.tv. Send them to us and we'll get your questions answered. Well, first up, we have a query coming from Mr. Bala Shetty. He says, how can a super senior citizen think about investing for a 25 to 30 year time horizon? Okay, when he says super senior, I'll just consider to be senior, because he still believes he has a 25 to 30 year time horizon. This is something that Mr. Shetty is asking. All right, so Mr. Subramaniam, we often say that, okay, you're investing for retirement, but then we forget that even after retirement, financial planning will continue to be an ongoing process. It's just an event, it's not the end goal. So what are the options today available for senior citizens?
So if he is talking of a senior citizen who is above 80 because he says super senior citizen, then I think, see, the question is we do not know why he is investing. Either he is investing for himself or he is hoping to give it away to his children. If he's giving it away to his children, then you have to see children's risk profile rather than this person's risk profile. He or she, we don't know why they are investing. But if he's investing or if she's investing for themselves, then I think a balanced advantage fund at this stage makes sense because you will have the upside of equity and some kind of a downside protection in debt also. But clearly the purpose is not said, so I really don't know. If he's going to bequeath it to his grandchildren or his children or whoever, then it doesn't matter. Then you're talking of a 50, 60-year time frame, then I would put fully in equity. But if he's investing it for himself and he's got enough debt, I would put a balanced advantage fund. I wouldn't go beyond balanced advantage fund for a super senior citizen.
A balanced advantage fund is a good option for somebody who is in the senior citizen category. But of course, if you are investing your money to pass it on as a legacy to your heirs, then go full on in equities because, then obviously your time horizon as well is much more longer. All right. Well, I think our next viewer seems to have read your mind, Mr. Subramaniam. Sridharan Arukaville says that I've been reading about balanced advantage funds being a good fund to invest in because markets currently are very high. My question is it advisable to invest lump sum in balanced advantage funds or should we resort to an SIP only? Mr. Subramaniam, firstly, when you spoke about balanced advantage funds, did you mean it for the purpose of senior citizens, or also is this your strategy given the fact that we have the markets hitting record high levels? Some experts are getting a little skittish about valuations and anticipating a drop. A balanced advantage fund could cap some of that volatility. What was your intention and what would you recommend, Sridharan?
Mubina, for a person who does not want to invest too much time and effort in learning how to invest, balanced advantage fund seems to be a good option, even for a 30-year-old or for a 60-year-old or for a 70-year-old, because the fluctuation will be there, but you're getting the upside of the equity and your, some kind of a short return kind of a thing is there in the debt portion. So yes, it is risky, but it is definitely less risky than even an index fund, because if you're doing an SIP, even for a youngster like you, if you're doing an SIP in a balanced advantage fund, you would not lose out too much. You participate both in the upside and some protection in the downside. So therefore, I would suggest it for both these people. And because it's a balanced advantage fund, I wouldn't mind doing a lump sum because it is a fund manager's job to ensure that he's putting the right amount of money in equity and right amount of money in debt. He can even do a multi-asset fund because if the multi-asset fund puts in some gold, some REIT or some US funds, then the return could be even better. But yes, a balanced advantage fund for most people who don't want to, think of rebalancing and all, is a good fund for a long-term capital accumulation.
Okay, so for those individuals who don't want to get into the whole hassle, this is a good option. Let's take on board our next query, a very interesting one coming in on a thematic fund, a very popular thematic fund, and that is a pharma fund. We have Naren P asking, I've made good profits in my pharma fund and now I'm thinking of exiting as the pandemic is largely over. What's your view and where should I switch over? Well, the pandemic is over, but please stay safe, folks, and, wear your masks. But yeah, when it comes to the markets, the way they are behaving, it would largely indicate that the pandemic is over. Do you have a view, Mr. Subramaniam, on these pharma themes? And, it's good that Naren's got a good catch. Do you think now is the time to move on from that fund?
I actually don't know whether the pandemic is over. We all love to believe that the pandemic is over and it can just come back. We have no clue what is happening all over the world. So what happens if it comes back? So I would look at it this way. There is always this thing of saying that, in a thematic fund, you have already participated, you have gained well. At least remove, say, 50% or 60% and put it into some other fund. But thoda paisa udhar rehne do, because if the pandemic does come back, you don't want a FOMO situation of saying, oh my God, I missed out on all the upside in pharma. I don't know whether the upside in pharma is over. So let me start from there. So therefore, I would remove maybe 50% of the money or 60% of the money from that fund and put it into some other, well-diversified fund to reduce the concentration risk in my portfolio. Other than that, I don't know whether I can time the market so well and say I'll get out of this and I will get into some other fund. I don't know. But maybe infrastructure is not done too well. Maybe banking is not done too well. So maybe into some of those funds. But I wouldn't worry too much. I treat pharma fund as a place where you go to when you have a medical bill which the insurance company is not paying. Suppose I have a medical bill of 3 lakhs out of which the insurance company is paying only 2 lakh 10, then 90,000 I would withdraw from a pharma fund. That is how I treat my investment in a pharma fund. So each person can decide to treat it differently. So if you have a small amount, then don't bother. But if some 25% or 30% of your net worth is lying there, then obviously you need more active involvement. But if your net worth is 2 crores and you have some 5-10 lakhs lying in a fund, then this shouldn't matter at all.
And on that note, we're going to take a very short break on the show. Be right back.